The Mortgage-Free Life Strategy shows you how to pay off your mortgage, typically in 5 to 7 years, save hundreds of thousands of dollars in interest payments, and create a tax-advantaged retirement income. Traditionally, home buyers take out a 15 to 30-year mortgage. They typically have a checking account, income, and expenses such as mortgage payment, utilities, groceries, car payment, etc. The income is deposited into the checking account, and expenses are paid from the checking account. Let's take a look at Bob and Jane. They have a combined monthly household income of $10,000 and monthly expenses of $5,000. With the Mortgage-Free Life Strategy, they utilize a mortgage-free loan. This loan absorbs the traditional mortgage. Bob and Jane's home is worth $330,000. They currently owe $260,000. The bank will give them a line of credit with up to 90% of the value of the home, which equals $300,000. Every month, their monthly income passes through the checking account into their mortgage-free loan to pay the debt. In this case, it reduces the amount owed to $250,000. All other expenses are placed on a single good credit card to utilize a grace period and are paid off from the mortgage-free loan at the end of the month. The balance pops up to $255,000. In month 2, the same thing happens. $10,000 in monthly income flows through the checking and into the mortgage-free loan, bringing the balance down to $245,000. Then the monthly expenses flow out, bringing the balance back up to $250,000. With the Mortgage-Free Life Strategy, you reduce your balance and build equity faster. In this example, we started with $40,000 in equity and reduced the balance by an additional $60,000 within a year, bringing the new balance to $200,000 and the equity and line of credit to $100,000. As equity grows, you get debt-free faster, typically having full equity in your home within 5 to 7 years. This strategy lets your money reduce your debt for a longer period before expenses are due. Over time, consistent income deposits and strategic expense management reduce the balance. This is just one piece of the Mortgage-Free Life Strategy. The next component is the IUL. An Indexed Universal Life, or IUL policy, is used to build wealth. Income flows into the checking account and partly funds the IUL. The IUL returns are based off the performance of the S&P 500 with a 0% floor that guarantees against market losses and a variable upside cap on the gains, providing not only a death benefit but also chronic and critical illness coverage and giving you a conservative wealth-building tool that addresses multiple life scenarios. The IUL is a powerful financial vehicle. In our example, based on the average of 5 to 7 years, we pay off our mortgage-free loan and all other debt. Essentially, the household is debt-free at that time. Next, we continue to build up the IUL. This takes what would otherwise be paid towards mortgage interest and payments for 27 years and puts that money toward building a tax-advantaged retirement income. The IUL has another benefit as well, allowing you to take loans against your policy without reducing the account value. The IUL has another powerful advantage. It allows you to build your wealth with uninterrupted compounding interest. For example, if you have $100,000 cash value and take out a $50,000 loan, you still earn interest on the full $100,000 and you aren't taxed on the $50,000 loan. The Mortgage-Free Life Strategy combines efficient debt reduction with strategic wealth building. This approach transforms your mortgage payments into a tax-advantaged retirement income stream. It's time to think outside of the box, break free from tradition, and live a mortgage-free life. Contact one of our MFL agents today to see if you qualify.